QYLD for dividend income. Let's talk about it on Kyle Talks Money. Yes, I do own shares in QYLD, otherwise known as the Global X NASDAQ Covered Call ETF. For some of you Wolf of Wall Street fans, they're simply known as QYLDs. I highly recommend you do your own research before making investment decisions. It's your money, right? So what is the QYLD ETF anyway? And why should you be interested in holding it long term? There are two reasons why you should own QYLD. First, it's the 11.81% dividend, which is very high. And 11.81% is of the making of this video. It can and will change depending on the price and other factors. Second, it pays a monthly dividend, which is fantastic. Most dividend-paying stocks pay out every quarter, which isn't great if you're looking for sustainable long-term income. Because the price is pretty stable aside from overall market corrections, you're not going to see stock appreciation. QYLD usually stays within a band, unlike the S&P 500 ETFs that usually appreciate in value over time. For that, I would look to dollar cost average on the QYLD just to smoothen out any fluctuations that may occur. So why the high 11.81% dividend for QYLD? The Global X NASDAQ Covered Call ETF does something that rarely any managed ETF does. They write covered calls. Specifically, they write monthly at-the-money covered calls on the NASDAQ 100. Because it's at the money, the premium is high. But that means appreciation of the ETF is non-existent since in a bull market, they're forced to sell their shares every month. That's the trade-off. Think of it as real estate that produces rental income, but the house never appreciates in value. That's sort of like what the QYLD does. But I like it because it produces that income, which I believe is more important than stock appreciation. Appreciation, for the most part, only matters if you plan to sell the stock, which in this case QYLD is meant as a long-term income generator. As I'm making this video, QYLD is priced at $22.51 per share. If you were to retire on $1 million, you'd own 44,000 shares of QYLD at that price point. With an 11.81% dividend, you'd be paid roughly 21 cents per month per share. That equals to $9,600 per month on a $1 million account. That's pretty good. Of course, you have to account for the movement in price over the year, and some months will pay out less in dividends. That's why it makes sense to do dollar cost averaging on QYLD. And let's not forget that QYLD has an expense ratio of 0.6%, which is pretty good for a managed ETF such as the QYLD. Any higher, like 1.5% or more, is just too much. But of course, only invest what you're comfortable losing. That's for stocks, ETFs, and yes, cryptos. What are your thoughts? What's a good long-term stock to hold? If you like this video, smash that like button and don't forget to subscribe to my channel. I talk about money and everything related to it, so don't miss out. And as always, take care of your money.